Look, a balloon.
Hello again everyone, I hope you're all doing really well. So I'm doing another update to continue to track the progress of the Exela Technologies short squeeze play. This update captures the trading action from Friday and is forward looking to the last trading session before Exela Technologies releases their highly anticipated June quarter results following Monday's trading session. Just on a side point, I'm a little bit unclear on the exact release time of the results. I thought they were going to come after market on Monday, but they may be coming pre-market on Tuesday, the 10th of August, as they have their results conference call for that morning also. Either way, Monday will be the final trading session before this information is released. And if what happened on Friday is anything to go by, we could be in for another wild ride with the stock on Monday, particularly for the short squeeze play. Like my other short squeeze updates on this stock, this will be largely a technical analysis to track the progress of the short squeeze. I've covered the nature of the short squeeze in more depth last week, which I will link in the video description. So let's get into this update.
My Warcraft clan was still on speaking terms.
So to start with, we can see how Friday's trade played out on my existing model, the short squeeze. So as we can see, we have our red and grey squares, which already have captured a bunch of short sellers and have them currently under pressure since XELA started its latest rally. We also have the yellow square, which may still have some short sellers caught out from earlier when the stock was going through its previous dip. Finally, we have the small blue rectangle, which was sort of like a potential short seller trap that was set through the second half of Wednesday's trade and all of Thursday's session, where the stock did trade in a fairly flat range. Now, if we have a look at what happened on Friday, we can see that there was initial sell-off at market open, which potentially could have freed short sellers in the blue square and even some of those longer suffering short positions from the red and yellow square. So the opening did not bode well for the short squeeze effort. However, in some good news, for the short squeeze effort at least, it seems there was then a return to upward momentum, which then drove the stock price up above the $3.20 mark, where it finished the day. This continued momentum has potentially extended or intensified the short squeeze despite ceding some ground early on, and I'll show you why. So keep in mind that my charts are a bit funny with the dates and times as I trade from Australia, but Friday's trading session basically starts with this green line. And what we can see during the start of the Friday session is during this dip, there is actually reasonably high volume of trade going on, which would include a lot of short sellers trying to hopefully jump on some of that downward momentum. Interestingly, as the price began to slowly rally up, this corresponded with a period of fairly low trade, which makes me think that not many short sellers were getting out of their position at that point. We then have our much heavier traded period in line with when the stock starts to rally. So I think, except in the initial window, there is a good chance that many people who put on short sales did get caught out during the day's trade.
My kid didn't have a face tattoo.
In a further sign of the intensification of the short squeeze, we can see that the short's borrow fee has now climbed to 9.02%. This figure was about 8.35% on Wednesday. The borrow fee increases when the overall outstanding short position grows and the stock price moves further away from the average short purchase price. Basically, the risk profile of lending stocks for shorting increases. So that is a good sign, as it means there is a greater level of distress being felt by the short sellers following Friday's trade.
I was still thinking of going back to school.
And I was still just a paper salesman.
The most distressed of the short sellers at the moment are captured in this grey box here. Anyway, to work out what is now happening with the short play, I have drawn a new red line, which is marking the low point that was achieved on Friday. This is important as it can give us an indication of where some short sellers could have got out of their positions. And as we can see, it does bisect our existing red and yellow squares. It also could have been a chance for those in the blue short trap to get out. This doesn't mean that they surely did get out. It does, however, mean that some possibly did, which is important for realizing price points which can damage the short squeeze effort. The good news, however, the window to exit these short positions was only a small one, lasting about 90 minutes in total. The next step for adjusting this diagram, I have adjusted my existing boxes. So the original red and yellow boxes have lost a bit of their height. However, and this is an important thing for this short squeeze effort, the red box still contains most of the trade which occurred during that period of time. And of course, our nucleus of the short squeeze, the grey box, is untouched. And to be honest, I think this short squeeze will remain a play as long as the red box does not get encroached any further and the grey box remains untouched. So basically, as long as the stock doesn't fall below the $2.70 mark. Back to the rest of the drawing, I've actually expanded the blue box, mainly so it includes Friday's initial trading action, as these positions have now become under pressure. So if people place short trades in this window and didn't get out of them before the rally, they are now under pressure. So this is a little like like our original yellow box, there may have been some short sellers caught out here, especially when you consider the low volume of trade once the rally began. Of course, I have included a new red box that now captures all the short positions that would not have been able to exit once the stock rallied in the back end of the trading session. Now I can see that this diagram is beginning to look a little confusing with all of the different squares and colors, so I'm going to readjust the color coding just for simplicity's sake.
Well, this has been fun, Pam. Thanks for calling us all down here.
What we now have are two colors. We have the red, which represents the positions currently under pressure from the short squeeze, and we have the yellow, which includes areas where there may still be some short dealings which have been caught up in the squeeze. The areas that I've unshaded during this video may also have some outstanding short positions. However, for the sake of tracking it, I think the shaded zones have the greatest number of positions caught up in them, thus representing the greatest potential of the short squeeze. At last check, over 36% of the float is currently held as outstanding in shorts positions. To put this figure into an academic context, anything with a short interest of above 10% of the outstanding float is actually considered to be highly shorted. So this is a real short squeeze we are watching, and we have a potentially juicy catalyst coming in the form of the June quarterly results, which could drive it further, or of course be its undoing. I think Monday will be a turbulent day for the stock again as traders and short sellers try to work out what to do. There is likely to be some news come out about expectations for earnings from external sources, which can further rock this market. I guess we just have to wait and see what happens. I'm personally not invested in this at the moment, but it is an intriguing situation that has some of the potential catalysts of the GameStop and AMC's short squeeze efforts, particularly in the sense of Exela Technologies being an overshorted stock on the grounds of weak financials, which many would inevitably believe to be turning around sometime in the future. There have been some signs of decent improvement from the company in the last few months, and we know they are holding a lot of cash that was intended to reduce liabilities and unblock the pipeline for further scale, with early signs from their DMR and dry sign offerings already being flagged in recent weeks. How much of this company improvement is realized in the June quarter, we will know by Tuesday, and I think will be a major catalyst for determining the immediate future of this short squeeze effort. Anyway, what do you guys think? How much further do you think this short squeeze can run? How much of an impact do you think Tuesday's results will have on the stock? Let me know in the comments below. If you want to see more Exela Technologies or other stock related updates, I would encourage you to subscribe to the channel. I do try to release a new video more or less every day. Also, by doing so, you are helping to support the social enterprise initiative I'm aiming at transforming this channel into, the concept of which is that by watching YouTube videos, people are helping to make a difference to some cause that I am sure many others are passionate about. So I encourage you to join up and be a part of all that. Anyway, until next time, thanks for watching guys. May the markets trade in your favor. Cheers.
Kill the balloon! Kill the balloon!